Hello everyone and welcome back. Let's take a look at Mullen, or ticker symbol MULN. This is one that got on my watch list as soon as it dropped to 72 cents. So I think a lot of fear set in, and yes, this might not be the bottom of the market. We could have some volatility coming up, but I believe a lot of these macroeconomic factors that set in today are going to dissipate, and as we get closer to the Fed speaking on Friday, I think we get a little bit of alleviation on some of those concerns. Of course, these rate hikes aren't going anywhere, but I think we still are okay for now. Now, in the short term, I like Mullen, but in the long term, and I'm talking about through a reverse stock split and through shareholder dilution, you want to be careful with this one. So be careful because we've been through this before. For those of you that have watched this channel, we've went through extensively on how reverse stock splits work and what they do to shareholders and equity, and why is Mullen even doing this, right? They needed to raise capital because making EVs is expensive, and I will say, if there's truth to the battery technology and everything they've done with their R&D spend and some of the metrics that they're trying to accomplish and avoid debt, that the shareholder dilution is really going to fix itself after a reverse stock split to some extent, and they may not issue all 2.25 billion shares. They might not. They could, but they might not. So this article talks about how Mullen Automotive is stretching investors in two directions. On one hand, increasing the total share count from 377 million at the end of the second quarter to 2.25 billion is highly dilutive and suggests that the company will need to pursue a reverse stock split at some time in the near future, since NASDAQ requires listed companies to keep their shares above $1. Now let's take a look real quick because I want to make sure everybody understands where we stand as far as the 30 days consecutive that we have to be under $1. So right now we're at 20 consecutive days, and the way that we get that is we scroll all the way down here and we find the last closing day. So we look at the closing column on Yahoo Finance, and we scroll all the way down here, and we've got 102 on July 25th, and then we count up 1, 2, 3, 4, 5 until we get all the way to the top where we get 20 days. So we have 10 more days before we would receive a deficiency notice to the company, and that would notify the company that they have a compliance period of 180 calendar days to regain compliance. So it's not like anything's going to happen immediately unless the company decides to take some crazy weird action. So there shouldn't be any extreme fear in the short term, in my opinion, as far as a reverse stock split. But coming on down the road, if they can't perform past October, I would say that that is definitely something that is in the cards with the dilution that is on the table. And I think that's what this article is trying to say, that in the future, in the near future, now near future, to you, what does that mean? Near future, is it 6 months? Is it 1 year? Is it 180 days? So within that 180 days, there is a potential that the company would need to file for an extension or do something. So it's just going to make it difficult for these shares to respond to any kind of activity unless the volume stays really high. And right now it's trading at about, let's take a look. Let's go to FinViz for just a moment. We've got Mullen here. It traded at about almost 100 million trading volume, and for consumer cyclical and auto manufacturer, that's pretty good. I mean, Ford was right behind it. Of course, they're doing layoffs. Not sure if you heard that. I think it was like 3,000 people, but there's still some good news for Mullen Automotive stock. Okay, Mullen announced a binding contract with Delpac Logistics to deliver 600 Class 2 electric vehicle vans. Now, they've got to start doing this in August, and they're supposed to deliver 300 units by the end of November 2022. So it looks like good news here. Also, they are talking about in October that they're supposed to be showing this SUV, the Mullen 5 crossover, and the company took 25,000 reservations for its consumer model late last year, and deliveries are expected in the second quarter of 2024. So we have a lot of time, right? We're really, and we knew this, we've known this for a long time, that we're really relying on the vans to help get us through another 2 years, a year and a half. I mean, that's quite some time. That's why I was like, hey, I might just stand back and just play this momentum on this one. So you definitely want to be careful. Now, it does say that we've got some capital management that's happening by external or institutional investors. We've got BlackRock, we've got Vanguard. Now, BlackRock has been known to make some bad investments, and most of these companies are down pretty big. So, I mean, it's not necessarily true that they bought at the right period, but it is good to see that there's institutional ownership and they're increasing their holdings. You can see here from 4.2 million to 30.8 million since mid-May. Now, these are all good points. Let's take a look at the charts. Should you be dollar cost averaging into a price point right now, or do you need to be patient? Let's take a look. So we're on the daily chart, and you can see the green line here represents the 52-week low, and that's at about 52 cents. Let's scroll down just a little bit so we can see that price. We've got it here at 51.50, and we're currently sitting at 70.75. So this is a little bit below where I notified the people in the Patreon to take a look at this. So be sure to be careful at this level. Always dollar cost average into any position and pay attention to your technicals. Down here, you can see the RSI indicator sitting at about 33. And normally it does respond when it comes down here and comes back up. So you could see last time it was down here at about 31.95 when it came back up. So it is down here on the pullback. And I believe that we do, like I said before, I think we're going to see a little bit of a pull up in this price, maybe not too much, but that could be a great opportunity for those of you that didn't get in as low as you wanted, or you think you have potential to get in even lower by being patient, that the last 1, 2, 3, 4, 5 trading days has just been straight selling. The last time we seen selling pressure like that was back here in April, and you could see it continued to decline for quite some time after that sell-off. So I would just be careful. You could see a continuation of this price going down just a little bit in the short term before it actually finds support. And I would say that's at least got to be after the Fed speaks this Friday. That's all I've got, and I'll turn it back over to you. Be sure to like and subscribe, and I'll see you in the next video.